Hello, hello. Hey there. If you can hear me, welcome to the session. Today is the strategy clinic with Vantage. As we wait for a couple more people to stream in, if you can hear me properly, if you can see my screen, put it into the chat, let me know. Hey there, you. Afternoon, Zoran. I guess by responding, good afternoon, Zoran. I guess by responding, you can hear me okay, and also you can see my screen. So it's a good start. Welcome again. Thank you all for turning up early and on time. I'll give it a minute and two before I get started. Hey, Francis, how are you doing? Right, so as usual, today being Thursday, we do have our strategy clinic. So I hope you have questions, you have things to ask. I'm here to help you with your trades, your strategy. If you have any questions, I'll diagnose it. I'll give you my view, my opinions, and then we can see how we can tweak things to make it better for you. And also with that, what I'll also be doing is I'll be looking through some possible trade ideas, some possible trade setups with a couple of news on the horizon, things to pay attention to. So as usual, give me a quick, and at least I know you guys can hear me and see me okay. Let me know where you're joining me from again, and then we shall get started. Qatar, fantastic. I remember, Zoran. I remember. All righty. So let's get started now, right and proper. Today being Thursday, strategy clinic, trading strategy clinic. I look forward to your questions. If you have anything about how to, your strategy, how I can try and help you with that, I'll be happy to give you my views. My name is Jin Dao. Let's get started. Everyone calls me Jin. So as usual, before we get started, a quick disclaimer is that any information, context, opinions expressed in this presentation and the following slides and things I talk about are solely those of the presenter and not necessarily those of Vantage, and are used solely for educational purposes only, as they do not constitute investment advice and or consultation on how a client should trade. Right? So please remember, before you jump into any trades, do your own due diligence. Check your trades, check your leverage, check your margin, before you enter into any trades, because we can't be responsible for any profits or losses that you might incur. All right. So yesterday's webinar, I'm pretty sure it'll be uploaded onto the YouTube channel, so check that out. If not, then I will check on, I can't remember what was yesterday's webinar, but let me check on that, and I'm sure I'll get someone to respond to you on that, Francis. All right. So a quick introduction of the team of analysts here to help you with your trading journey. I'm sure you all know Desmond. We have Cassandra. Desmond, the chief trader. We have Cassandra as the prop trader. Myself, Jin, I'm one of the prop traders here. And we've got a whole team of investment analysts to guide you through the setups that we're looking into. All right. So a quick introduction there. Let's look into it. All right. First off, if you have any questions, please feel free to ask it. You don't have to wait for me to pause or to, look for questions. I'll be happy to jump into your questions at any point in time. Just to tell you about how I trade, right? My first approach is always, I'll check out the news. I'll check out the fundamentals to try and find out where should prices be heading. where should prices be heading based on the previous news, based on the previous data, and also if there's any surprises that could be in the horizon, right? So I always check the news first. And in this case, just to show you over the last couple of days, right? So I'll go back to, let's start on Monday. You can see that Monday, nothing much, no big news happened. So it was quite a trending scenario. We were looking to follow the trend in that case. For me, especially the way I looked at it. Then on Tuesday we actually had a whole bunch of news, right? A whole bunch of news. Just so that I know, are you guys familiar with a PMI? Are you familiar with a PMI? Right, so the PMI is a purchasing managers index. It basically gives you an idea, or gives us an idea about, whether that industry or that sector, in this case the services sector or the manufacturing sector, whether it's in an expansionary phase. If it's over 50, it's in an expansionary phase. If it's under 50, it's in a contractionary phase, right? So it gives us an idea of, French services sector. Is it expanding slightly? It is expanding, but it's slower than before. Manufacturing PMI, or manufacturing sector, is in that contractionary phase. It was a 49.5, came out at a 49. So in this way, you get an idea of the industries in the Eurozone. And how I look at it, French, German, and the Eurozone actually is not doing as well, right? It's actually bad data despite the green numbers, right? Despite the green numbers, because Eurozone manufacturing PMI went from a 49.8, expected a 48.9, but it came out at 49.7. So it's still a decrease. It's still in the contractionary phase, and it's actually still dropping, slower than expected, but still dropping. Services PMI in this case as well went from a 51.2 to a 50.2, right? So it's on that borderline scenario where it could get into that contractionary phase already. So it doesn't look flash, it doesn't look very good for the Eurozone, and it actually reflected onto the price movements as well, because we actually saw the euro dollar drop briefly from that point. All right. Pound for the UK manufacturing PMI went from a 52.1, expected a 51. So they expected it to stay within that expansionary phase, but it came out at a 46. Massive drop. What we actually saw was that the pound dollar drop as well, 46 in that contractionary phase. Services PMI rose slightly, but still less than previous. So with that movement, what happened was in the evening, we actually saw the US services PMI drop significantly. US manufacturing PMI dropped significantly as well, went from a 47.3 to a 44.1, weaker US dollar, 52.2 to 51.3 for the manufacturing PMI, again, a weaker US dollar. That was the start when we started seeing the dollar get weaker and weaker through to today, right? So that's how we got that start of that dollar weakness, PMI numbers. And then on Wednesday, yesterday, we saw durable goods, slight change, slight to no change. Core durable goods went from 0.4, month on month increased at a 0.3%, not a big change. And durable goods, no change there, stayed even at a 0% on a month-on-month basis. Okay, so that's why, going to the dollar index here, that's why we saw that starting to drop. The PMI numbers started to give a little bit of a dovish sentiment, pushing the dollar index down from that 109 level down towards that 108, now at a 108.17 level. Why is it still dropping? Today, we do have the US preliminary GDP to be released quarter on quarter. It was a minus 0.9%. It was a minus 0.9%. expected to be a minus 0.7%. If it does come out at minus 0.7% tonight, well, tonight GMT plus 8 at 8:30 p.m., then there's going to be consecutive quarters of negative GDP for the US. If we get negative GDP on consecutive quarters, that puts, or in terms of data-wise, that puts the US into a recession, right? So it's a technical, what we call it as a technical recession. Why that's important is because based on the data, it says that the US is in a recession, but based on the statements from the Federal Reserve, based on the statements from members of the Federal Reserve, they don't believe, or it doesn't seem like the US is, to them, the US is in a recession. Okay, so that's quite important there. What I would expect to see with the US GDP to be released tonight is that if it does come out at that minus 0.7, could be even a minus 0.9 again, then we might see further downside for the dollar index. Might see further downside for the dollar index. But I don't think it's going to be down all the way. I don't think it's going to go from 108.18 down to that 104 level. Not a big drop, because tomorrow, right? Tomorrow starts the Jackson Hole Symposium. Okay, the Jackson Hole Symposium is a gathering. Oh, let me do that. Right, it's a meeting held attended by all the central banks or major central banks, finance ministers, academics, financial market participants from around the world. High volatility event, right? A high volatility event because all the central bankers coming together, talking about policy, monetary policy, their plans, their future projections, likely to be a very high volatility event. And with that as well, the view is that Chair Powell from the Federal Reserve could release a hawkish statement, or could take a hawkish stance during that Jackson Hole event. All right, so it could be hawkish. Like you can see here, Jackson Hole likely to underline current Fed strategy. So they've been talking about the Federal Reserve's strategy, possibly going to give a bit of a timeline or a forward guidance in terms of interest rates decision and their expectations for inflation. But that line there is key. A hawkish Fed at the Jackson Hole is poised to end the US rally, right? So I have had a lot of questions from other traders I'm coaching, where they go, hang on, if the Fed Reserve does come out and say that interest rates for the US should be going up, why would a higher interest rates in the US cause a weaker dollar? Okay, why would a more aggressive stance with interest rates increase cause a weaker US dollar? Typically, if the Federal Reserve increases interest rates in the US, you should see the US dollar strengthen. But with the current situation right now, US inflation is very high. I can't remember what the number is, but it's near historic highs. I think it just came down a little bit. The US GDP we just saw is likely to be a minus 0.7%, so a negative GDP, which means a slowdown in economic activity. And if we do see the US Fed Reserve continue to increase interest rates, that's just to try and bring down inflation, that's likely to cause further slowdown in economic activity, right? A further slowdown in economic activity. So what that means is that we're likely to see the US dollar weaken. If they're too aggressive with their interest rates decision or interest rate hike path, then we could see a weakness or weakening of the US dollar. And hey, if the US gets into a recession, then we might actually, or that might actually translate or push on towards the other major economies for them to get into a recession as well. Okay, so it doesn't look very good if we have too hawkish or too aggressive of a rate hike path to come from the Fed Reserve. What we are looking for is for the Fed Reserve to come out and say, they're going to increase rates. They're going to continue with their current path of rate increase, while trying to bring inflation down and keep economic activity, despite it dropping a little bit, having less impact on the economic activity slowdown. That if that comes around, then we're going to see the dollar strengthen quite significantly if they do say something along those lines. So that's the Jackson Hole Symposium that's going to happen through Friday, Saturday, and Sunday. That's where Fed Chair Powell will be speaking. So you can see speaking at the Jackson Hole Symposium. With that, we do have an inflation, a core PCE price index versus an inflation number to be released tomorrow on Friday. You can see that it's the Fed Reserve's primary inflation measure. All right, so that's going to be quite crucial to be released while they're having that Jackson Hole Symposium. And then into next week, we do have CPI data to be released for the Eurozone. Okay, we do have the US ADP non-farm employment numbers, Eurozone CPI estimates as well, and then OPEC meetings. And on Friday next week, we do have the US non-farm payrolls to be released. Okay, so quite a lot of news, quite a lot of data and speech to be released between now and next week. So we might actually see, despite the current weakness in the dollar, we might actually see a lot of volatility. I think that is going to track lower before bouncing back up towards the upper side again. I'll tell you more about this in detail. At this point, any questions from anyone at this point? Hey, Deborah, nice to see you joining us. If you got no questions, you could also tell me about a recent trade that you got into. I'll be happy to look through a possible trade or a past trade that you did, and then we can try and break it down and do a bit of analysis on that. Yep, Francis, you got your hand up. Please go ahead. Let me know if you got a question there. All right. So while you're typing that question, all right, or while you're asking a question, what I'll do is I'll show you a bit of an analysis here on the dollar index. Okay. What I would do, so as I was telling you my approach, first I look at the news. And I've just shared with you my view of the news there. And then I look into the charts. I look at it first on the H4 time frame, determine the trend, determine the support or resistance levels, and then after that look into where it could bounce based on the news and based on the data, or where it could track down towards or track up towards. All right. I will look into the Kiwi dollar and the CAD yen. Before that, I'll do the dollar index first. So dollar index, squeeze that down a little bit. Okay, dollar index right now trading at 108.13. Interestingly, what I was just doing just then was that I had this on, right? Okay, so just to share with you all, dollar index does have this upward move. Okay, you can see that upward move, that upward trend line right now is broken that trend line. It is sitting at a level. If I did that, oops, where did all my lines go? Okay, let me just put that in. I'll put in everything just to show you. Okay, so it is sitting at that level, at that 23.6 Fib level. Okay, it is sitting at that level right now. Given that it looks like it's breaking that point and it's broken that trend line, I think that we might actually see the dollar index. Where's my favorites? Okay, we might actually see the dollar index trade down towards that 38.2 fib level, which is also around that 107.50 level. So I think we might see some downside, especially if the GDP number tonight get released weaker than expected, or in that negative territory. You're going to see the dollar track lower. But something to note is that we do have that 50 MA crossing over that 200 MA, right? So, hey, 50 MA crossing over the 200 MA, do you know what that signifies? Do you know what does a 50 crossing over the 200 signify? Okay, I see a question there, Francis. I'll get to that shortly. Okay, so when it's 50 over 200, it signifies a golden cross. Typically, what that means is that we should be seeing, or it signals that price could be climbing towards the upside. So what I'm actually looking for is whether price could come down, hit that 107.50 level, and then possibly move towards the upside. Okay, move towards the upside. Is it going to go strongly towards the upside? Possible, but yeah, it could go strongly towards the upside, but it does need to break above that most recent high of about 109.25.23.25 level before we're going to see a more sustained move towards the upside. Okay, so why I think it's going to go towards the upside. Firstly, we do have the trend. Secondly, we do have a possible hawkish Fed at the Jackson Hole Symposium, and also based on the technical, we do have that 50 crossing over the 200 there could push towards the upside. It is a little bit of a lag indicator, so we could actually see this come down before pushing up. Okay, so that's my view on the dollar index on the H4 time frame. So coming back to your question there, Francis, if you are looking at the higher time frame like the H4 and you set your support and resistance levels after you move it to the lower time frame like the 5 minutes, how can you determine trend? Okay, so I'll give you an example here. That's a good question. So let's look at the Kiwi dollar, right? And I'll take that away. So the Kiwi dollar, let's say on the H4 time frame, we have our support level here at about 0.6165. Our ultimate key level is up there at 6462. Okay, this will not be sufficient levels, so we definitely have some other levels in between. I look for swing levels, so I like that point, hit and turn down, hit and consolidated at this point, tried to go up and turn towards the downside as well. So that's one level there, and then I will identify this point, right? And if I drag it right across, you can also see that it tried to break, bounce back up, tried to break, bounce back up. Okay, in this case, tried to break higher, came back down, and now pushed towards the upside. So just based on this couple of lines here on the H4 time frame, if I went to first the H1 time frame, right? If I went to the H1 time frame, it still applies. It would still apply that, hey, these are my H4 lines, the key levels that I need to pay attention to. But what you can also do is to start thinking about or start applying some interim levels, what I call interim levels, where we see price react. At this point, you could be looking at somewhere in the middle there. What you could also do is to apply a Fibonacci towards the downside. Okay, and then you can start identifying, oops, I need one more level there. Where's my 88? Okay, 88 is not there. Okay, so you can identify those levels at 78.6 as a possible interim level or interim area there. So so what you could do is put in a level at that point, possibly change the pattern, right? Make it a little bit of a dotted line just so that, or dashed. So you see, right, a dashed line just so that you know it's an interim level. Okay, I'll take that away for now. Then if you went into the smaller time frame, right, on the M15 in this case, those Fibonacci levels that we drew on the H1 does apply. You can see that 61.8 was a level that price came very close, and now it's retracing towards the downside. So you can use, you don't have to stick to the H4 lines, or well, you stick to the H4 lines, but you can add in more tools, more indicators, more levels to help you in the smaller time frame. Okay, so you can see here a resistance tracking down. In this case, we would say, hey, maybe price is going to be resisted at this point here. So we could see it come back down, but because of that M15 time frame, today pushing towards that upside there, right? We could see price come down towards that 0.623435 level, maybe could bounce back up, or come down to test that H4 level of 0.6225 before bouncing back up again. So this would be the case where I would say that either look for it to come down to this point and bounce back up following that trend, or if it breaks towards the downside, then we're back to that trend, resumption of the downtrend. Can we look to sell it down because it broke an H4 line? All right, so it's about respecting the levels. Obviously, the bigger time frame, the level, the stronger it's going to be, the more you need to respect it. And if it breaks, then we're going to see a bigger move towards the downside. All right. One thing I'll also add is that I usually suggest, or I always suggest to all traders to, try and stay on the H4 and the H1 time frame. Anything below H1, I would, for myself as well, what I do below H1 is only when we look at news events. When there's a news event, then I'll go to the M1, the M5, and the M15. On a day-to-day, on a normal day, intraday trading, I'll be looking at the H4, H1, and at the very most, the M15. That's also why on my charts here, I don't have the M5 and M1. I have it up to the M15, because when you look at it in a time frame which is too small, what happens is that you get a lot of noise, a lot of volatility, a lot of short-term volatility that might actually cause more disruptions and more confusion than if you looked at it on a H1 and H4. You're going to see a bit more of a smoother move, might make it a little bit easier to trade. All right. So I hope I answered your question there, Francis. With that, what I'll also do is I'll jump towards Deborah's question about the Kiwi dollar. All right, so we have Kiwi dollar here. We do have the lines there. Let me just clean it up a little bit at this point. I scribble a bit too much sometimes. Okay, so Kiwi dollar at this point now. All right, I'll come back to that again. But let me get through the Kiwi dollar and the CAD yen, and I'll come back with another example again. All right. So the Kiwi dollar, interestingly, is that today. Right, come back to it. Today we did have a retail sales number for the Kiwi dollar early this morning. Was a minus 0.9, got revised, right? So it was actually a minus 0.5, revised to a minus 0.9. Expected a 1.7, came out at a minus 2.3%. Bad news for the Kiwi dollar. Same thing with core retail sales, came out at a minus 1.6%, expected 1.8. Bad news for the Kiwi dollar as well. All right. So typically what would expect is for the Kiwi dollar in this case to drop towards the downside because of that bad news. But what we actually saw was that it rose, right? It climbed towards the upside, and we all know now that this move higher was because of the dollar index dropping, right? Because of that dollar index dropping, that's why we saw the Kiwi dollar pushing towards the upside. So in this case, one very important thing to note is that the Kiwi dollar has found a very strong support at that 0.6165 level, right? It's tried to break, bounce, consolidated at this level. It's found a very strong support there. Now that it's broken above 0.6225, it could track back down again. But hey, given that we were anticipating that dollar weakness, like short-term dollar weakness, what I would actually be looking for is right now if the Kiwi dollar, zoom in a little bit, could come down, test this support, and bounce back up, right? Whether it could come down, test the support, and bounce back up. If that does happen, then you could actually be looking at I would be looking at a possible buying opportunity, let's say, towards the next resistance of 0.63, right? Now give me about a 50 pip move towards the upside. Stop loss relatively tight at about 30 pips. A 1:1.5 risk reward ratio towards the upside there for the Kiwi dollar. Okay, now actually I'll have that a bit nearer if it bounces off. So we have about 25 pip stop loss, about 25 pip stop loss there, about a 50 pip, 60 pip take profit, a 1:2 towards the upside. But what you need to do, what I would be doing at this point is to wait for it to come down, test, and bounce towards the next resistance level. If it doesn't come down and test and bounce, then you could be looking for a continuation towards the upside, similar to what happened here, right? In early August, where it found that 0.6225 level of support and bounced towards the upside. We're looking for that move, for that continuation back up again. All right. So quite relatively straightforward there for the Kiwi dollar. Hope I answered your question there, Deborah. If it does break below that 0.6225 level, straightforward, look to sell it down towards that 0.6165. But bear in mind that this is quite a tight range and it's found a very strong support there. So just be very careful trying to sell the Kiwi dollar down towards that next support level. Okay. With that, we look at CAD yen. Where's CAD yen? Okay, there we go. CAD yen a little bit simpler, right? A little bit simpler because it is following with that trend. I'll take that away. Right, it is following with that trend. On the H4, you can see that it's found a support. Pardon me. It's found a support at that 101.60 level, bounced towards the upside, fluctuated in between 103.30 and 105, and now that it's broken above 105, consolidated around this range. I think in the short-term view, it looks like it could climb up towards the 106.40 level. Can it break above 106.40? The next level up from that point would be at about 107.50, about 107.50, but it does need to break above that. For it to break above that 106.40 and then the 107.50 level, two things, either of the two things must happen is that we must see a stronger Canadian dollar or a weaker yen, right? A stronger Canadian dollar or a weaker yen. And why I think that we could see a move towards the upside is because looking at the US CAD here, we have seen, take those away, right? We have seen the US CAD drop, right? Break that trend line, drop towards the downside. Right now trading at a 1.29 level. If we see this go lower, it means that could mean either the dollar weakness or the CAD strength, right? So CAD strength being applied there. And then for the US yen, if it does find support at that 135 level or 136.50 level to push up CAD yen weakness there, that could all come back and align with the CAD yen to push it up towards, firstly, that 106.40 level. And if it breaks above this point, then we could see it go towards that 107.53, right? That would be similar to what happened here again in the middle of July, where we saw it track quite consistently towards the upside until it hit that resistance and turned back down. Okay, you can see that as quite a common pattern on the CAD yen. If I just drag that line right across, drag that line right across as well, and again, you can see that it's quite a similar pattern with what we've had and what we have now. So we're anticipating this move towards that next resistance, that next two resistance levels. Alrighty, hope I answered your question there, Deborah. Okay, so now let's get back to looking at some levels in terms of H4 and then into the smaller time frame. So what I'll do that, I'll look at the fantastic, you're most welcome there. We look at the pound dollar. Okay, so I'll clear that out. So pound dollar on the H4 time frame. Okay, first off, strong support level here at that 1.17, I'll put it here, 1.1764, 1.1765. H4 level, strong support level there. And then a resistance, I'll put it at that point, right at the tip of that at 1.1878. Okay, you could even be looking at it about 1.19, but let's just put it there for now. If we just had these two levels for the pound dollar on the H4 time frame, and if you were like Francis or you wanted to trade into the smaller time frame, jumping straight down to the M15, right? Jumping straight down to the M15, I would say that okay, if price trades higher, it could come towards that 1.1880 level. But if price trades lower, right, which level do I want to start activating a trade? You can see that it came up. Let me do that. It came up and hit a point there. Hit points there. Came close to hit a point there. And then again at this level, and then at these levels here. Right? So because of those reactions, and this is on M15 time frame, because of those reactions there, what you could be looking to do is to put a line right across as an interim level, right? This will be my M15 interim level. I'll be looking to say, okay, if price or if the pound dollar does trade lower and close, for me, I'll look for it to close below that 1.1830 level. Then I would say on a smaller time frame, I could be looking to sell it down. All right, this is on M15. I could be looking to sell it down on the smaller time frame. I'm waiting to sell it at 1.1915 on M30. Okay, I'll jump to that shortly. Okay, so based on this right now, I could be looking to sell it down if it breaks below those. What did my line moves? Okay, it could just move that down a little bit. Okay, I could be looking to sell it down below that 1.1830 level towards the downside. Could put in a few other analysis to say like, hey, we do have a upward trend, and if it does break below this point, we could see it track lower. So M15 time frame, selling not that one. Selling opportunity towards the downside, about a 20 pip stop loss. First ultimate take profit will be about 50 pips towards the downside. Another level to start thinking about whether you want to hold on to the trade would be at about that 1.1790 level. But you could even just have that trade 1:2.5 risk reward ratio towards the downside. Okay, so that would be how I would use an interim level on the pound dollar using an H4 key resistance and support levels, and then interim levels on the M15 time frame. Right. So based on what you're saying, you're looking to sell at 1.1915. Let me look at it on the hourly time frame. Take these away for now. Okay. So let's see. Where's 1.1915? All right. Okay. I think I know why you're saying that. 1.1915 is about there. Okay. So that could work. Before that happens, we need to see price come up. Right. We need to see further dollar weakness. We need to see price come up, break above that high point which we saw 2 days ago on the 23rd, and then reach that 1.19 and turn down. Could be a bit of an interim level there, turning back down towards the downside. That could work. I would say that I'll put in this as well. Well, let's test this level out. Oops. Okay, it comes quite close to that 61.8. If I took the other level, come close to that 50 fib level as well. So a bit of a confluence of levels there. If I had both of these levels, I know it's a lot of lines there, but just bear with me for a moment. We do have a 50 there and then a 61.8 there based on these two peaks and that same bottom level. So yeah, look for that, look for price to come up, test those levels there, reject towards the downside. If it rejects towards the downside, then we could look to sell it down. I'm not sure that if it climbs up that level, it could come all the way down, but you could see it come back down towards an interim level and then possibly lower again. The overall view, does that answer your question there, Francis, and also Zoran? All right. The overall view, or my overall view for the pound dollar is that, thank you. You're so nice, Zoran. Thank you so much. All right. My overall view for the pound dollar is still further downside. Right. It's still further downside. We are looking at higher volatility because it is consolidating within this range. But if you zoomed out, you can see that we're at a very key or very low point since July. All right, since July, hit that level, bounce back up. It's testing this area again. But from the research, from the analysis, hey, the UK is almost in a stagflation right now because we're seeing very high continual growth in inflation. We're seeing GDP reducing, economic activity slowing down, and yet interest rate is still high. So we're into that stagflation phase, right? And then with that, we could see, based on economics, further weakness on the pound dollar, based on the uncertainty in the political front. We could see that they're still looking for a PM, so more uncertainty, looking for that to break towards the downside. So what I'll be looking for is, for any upward move, I'm still looking to sell the pound dollar down. The main point is if it breaks below that 1.1759 or 1.1760 level, then let me find the next level for you guys. There you go. You can see that a very, very low point would be at about 1.1458, right? 1.1458. So just something to watch out for if it breaks below that 1.1760 level. Okay, and hey, it could break because of either the dollar strength or the pound weakness. All right. Okay, let me just see. Thank you. You're most welcome. Okay, so I do have limited time at this point, so I might not be able to get through the whole thing about Fibonacci's. Just a quick one is that you want to pick out the sharp turning points, right? And then you always go from left to right. You go from that point, sharp turning point, down towards the lowest turning point is there. And then I would pay attention to that 61.8 level. I'll pay attention to the 50, the 38.2. Others, I'll pay a bit less. And then you can see that once you draw that, you gain a bit of confidence when you see price touch and rejects those levels. You can use it as a bit of a support or resistance levels. You can see in this case, price came up, hit, and rejected towards the downside. Once it's broken, so in this case, once it's broken above that 23.6 levels, I'll consider it as invalid already. All right, I'll consider it as a bit of an invalid. So I'll be looking for it to come down. If it does turn down, then we could see it go down towards that side. But if you're looking for it to go up, I'll look at this as a resistance level. And then again, if it breaks up, this as a next level, and then this as a very key. That's why it's in gold, right? There's a very key resistance levels at 61.8. Okay, so that's the Cliff Notes version of how I would do it. I'm not sure, can't remember the session from yesterday. I'll check on that, what else they covered. But check out the YouTube channel. I'm pretty sure it's all uploaded there. Other ways to do it, what I also suggest is that while you can draw your fib levels, right? While you can do that, what you might also want to do is to start practicing doing some of your own levels. Okay, what I mean by that is that start thinking about putting in your own levels, about those points. Let's just do a couple for example. Those points there, right? And then if I took a different fib level from up here all the way down, what you would notice is that a lot of those levels coincides, right? In this case, that level we drew coincide about 23.6. That level we had coincides with the 61.8 key levels there. We don't have as much in between, right? Because we don't have that much levels, but you can see that it broke quite strongly. So it helps you build that confidence, not just by drawing a fib level, but by first doing your own support levels, your own support resistance levels, and then having the fib levels there to confirm your levels, right? You could even be looking at this 78.6 and that level that we drew as a bit of an area of resistance or an area of support as well. Okay, so you can consider areas of support and resistance rather than just a one-liner. If it coincides perfectly, even better then. Alrighty. Thanks for the question. I hope that helps you there, Francis. With that, one more thing I want to share with you. Fantastic. You're most welcome there. All right. One more thing to share. I've done this for, it's not so much talent, it's really just experience. I've done this for many, many years. So that's why we're here to help you, right? It's all about screen time, looking at the charts, drawing it over and over again. So the US Swiss franc, very interesting level here is that we've seen that push, that trend line towards upside is supported over since 12th of August all the way towards upside. Right now looking like it's breaking that trend line, right? It's breaking that trend line. Another thing to note is that those two high points, price is also breaking below those two high points now. right? It's also breaking below those two high points now. So it is at that level that is going to get quite interesting. If it does confirm a break of that trend line and of that support level, that horizontal support level, what I'll do is I'll add in this as well, a bit of a fib level. You can see that that coincides as well with our 23.6 level as well. So it is at that support level that does need to break before we're going to see significant downside. Next levels I'm looking at. I know that there are a few levels there, the 50 and the 38.2, but I'm paying attention to that 61.8, which also coincides with that round number support of 0.95, right? That round number support of 0.95 there. So in this case, what I'll be looking for is if we can see the US Swiss franc confirm a break towards the downside, I would be looking at something about 30 pips stop loss towards that downside level of about 90 pips, 100 pips, looking at a 1:3 risk-reward ratio towards the downside on the US Swiss franc, just because it's broken a couple of levels and we could see it trade down towards that next key support level again. Alrighty, so a couple of nuggets there. Make sure that if you're going to be jumping to any trades, do your due diligence, check your charts, manage your trade, don't over leverage, don't over trade. That you keep your trading account safe that way. All right. Any further questions? Hey Majid, how are you doing? Joined us a little bit late, but good. I hope you've caught up with everything. I'm doing great. I'm having so much fun. I'm looking forward, and I've set up a few analysis. I've shared them with you as well. I'm looking at all these setups, waiting to get ready to jump into any of those setups. I don't think there's anything scheduled tomorrow. I know I'm not scheduled on for tomorrow, so I'm not sure. You gotta check the schedule. All right. So let me see. What was the other ones I was looking at? US yen, nothing much there. Euro dollar pretty much spoke about already. A pound, no, the Kiwi dollar we did. Looks like it's going to push towards the upside. Dollar index is still sitting at that 23.6 level, so we're going to watch out for that. Pound dollar we did. Swiss franc we did. All right. One more thing to look at is also with Brent. We've seen it climb very strongly towards the 102.72 level. We could, okay, I'll do a quick last one on gold, okay? At this point, very key level there. Why we've seen that big move on energy prices, because Saudi Arabia came out and said that they might cut production for oil. So that's actually what's causing a supply crunch, which is why we saw price moving towards the upside. I think it's going to consolidate, maybe test a little bit lower, but push back up towards the upside again. So watch out for Brent and also WTI. Lucky last, let's look at gold. Gold, interestingly, I called it. I was calling it at about 1807, turned down. Great, super happy about that. One more thing to look at is that as that dollar weakens, we see gold gaining strength. And also you can see a bit of a move, supported move towards the upside. So I would be looking at those levels. If it can break above that 50 level, we could see it trade up towards the 60 level, the 61.8 fib level at about 1773 to push higher. Okay, can gold go all the way back up towards 1800? I'm not sure. I'm not sure whether it'll go all the way up. I think that, at this point, oh, wait, at this point, and also if I drag this up a little bit towards the next level there at about this level there, so about that 1778 to 1772 levels will possibly be where gold would climb towards and possibly hesitate for an extended period of time. Okay, so I think we might see that happen. We might see that go up, hit, and then turn back down again if we do see that US dollar strength come back into play. Alrighty. Okay, so with that said, I hope you had a good session. I hope I've shared with you very good information, good setups that we've had. Please remember, trade well, trade safe, and I'll catch you in the next session. Take care now. Bye-bye.